So today's lesson is journals, topic 4, and this is from chapter 6 of the book, and I have already provided the PowerPoint presentation, and those who have a book, so they can make reference to the book and also the note. When I was describing the accounting process, I said we extract information or data from source documents, and also we have learned some source documents and the relationship between source documents and the accounting records. From source documents, we extract data and then we record them in journals. And from journals, we post accounting transactions to the ledger. But we skip journals in order to understand double entry accounting system. So now I am going to fill that gap, and today I will teach you the importance of journals and a number of journals or different journals that we maintain in our entities, business entities. Journals are books of prime entry or first entry, as I explained earlier, and data gathered from source documents are entered first in these journals, and also without entering a transaction in journals, no transaction will be entered in the ledger, although we have done it for classroom exercises. The correct method is enter all accounting transactions in journals and then to the ledger. Journals provide summarized information gathered from source documents. From source documents we gather item by item and then record, and from journals we in the journals you record item by item and then you get the total. Totally means summarizing a particular transaction, particular type of transaction. And then journals are chronological records. That means journal entries are made on a day-to-day basis. You make today's transactions in the journals today and then tomorrow's transaction. So you cannot skip transactions in between. So it is a chronological record. Functions of journals. Journals act as tool for posting to ledger, analyzing the transactions into debit and credit, and also according to the elements, assets, liabilities, owner's equity, revenue, expenses, and again you have learned expenses again you classify as rental expenses, electricity expenses, wages expense, and so on. Revenues, sales revenue, rental, interest, and so on. So then you analyze them and then post them into the ledger. Another function, journals provide a record of transactions in chronological order. So it is recorded, as I said, date order. So then if you want to find some transactions on first week of January, yes, you can turn into the correct page and it is written January, February, March and so on. Journals provide easy reference forward and backward to source documents. Forward means if you look at the ledger, so then in the ledger you may have seen journal reference, right? I said journal reference will be discussed later because we have to discuss journals first before we move on to the journal reference. Right? Now we are slowly moving into that section. So then in the ledger we have a journal reference. Journal reference means the page number of the journal. So then if someone wants to go backward and see the transaction, so then he or she can refer back to the journal, right? From the journals, again you can go backwards. So in the journal, there is a source document reference. Say sales invoice number 25. So then you can make reference to the sales invoice file and find number 25. So backward and forward. So if you want to check the ledger account that the journal amount is recorded, so then you can check the relevant ledger account as well, because in the journal we record the page number of the ledger account as well. So that is called easy, it provides easy reference forward and backward to source documents. And another function is journals cut down unnecessary details in the ledger. So you cannot understand this right now because we haven't done the journal, but we have done the ledger, right? So you may learn this later on, because if you are going to record all the transactions one by one in the ledger account, so ledger will be a very lengthy one. Very lengthy one. Say for instance, if it is cash at bank account, so you want to record all the transactions that took place during a particular week. So maybe it is 500 or 600 transactions. So 500 or 600 transactions recording in one particular account means how many pages? About 25 lines per page, right? A4 page. Then 25, about 20 pages cash at bank account. So then you have to, now you have learned the balancing procedure also. 500 lines in the cash at bank account. Your calculator, the memory is sometimes not sufficient, right? You end up with errors. The journals provide summaries, meaning weekly summary, total received, cash received, total cash paid during this week, one entry. One entry for the entire week or the 500 transactions. 500 transactions are summarized into one single figure. So then journals cut down unnecessary details in the ledger. So that is also one important function of a journal. There are two types of journals: special journals and general journal, only one. General journal and special journals, more than one. Special journals are listed here: cash receipts journal, cash payments journal, purchases journal, purchases returns journal, sales journal, sales returns journal. So there are 6 special journals to record specialized transactions. So now, from this point and onwards, we will have to learn all these journals plus the general journal. Not only the format, but also recording transactions in journals. Not only that, posting journals to the ledger accounts. Right? So that means I am going to introduce another step in accounting. So I think I have discussed and explained the source documents relating to various journals some time back in one of my previous lectures, but this is to recap what we have discussed. Cash receipts journal purpose is to record all cash receipts. Cash receipts journal is to record all cash receipts by the entity. Whatever the purpose, if an entity receives some money, then it has to be recorded in the cash receipts journal. Then the source document is the cash receipt and cash register roll or cash register slip. Same thing. If your business entity is using a cash register, so at the end of the day, you get the cash receipts summary. That summary is called cash register roll because it is a roll, or cash register slip, or sometimes summary, same. Then cash payments journal. Cash payments journal is to record all cash payments. Whatever the purpose, if it is a payment, record it in this journal. And the source document is check but. So I explained this earlier. And then we learn two types of sales. One is cash sales and the other one is credit sales. If it is credit sales, the relevant journal is the sales journal. We record credit sales in sales journal, and the source document is the invoice. Invoice issued by the entity. So we are working for an entity, and this entity, this business has issued sales invoices to its credit customers or debtors. Right? And invoice means invoice is issued in duplicate in most cases. Right? And here the reference, the source document that we use to record credit sales is the original or the duplicate? What do you think? Original or duplicate? Duplicate. Original or duplicate? It is the duplicate. Why? Original is given to the customer, and you have the duplicate with you, and we use this duplicate invoice to record credit sales in the sales journal, in the sales journal. Then the next one, the fourth journal is purchases journal. It is purchases journal. The purpose of purchases journal is to record credit purchases. we purchase goods on credit. We purchase goods on credit, and the source document is again invoice. But this invoice, this particular invoice, is issued by the outsiders. Who are the outsiders? Suppliers, credit suppliers or creditors. When we buy goods on credit, they issue us an invoice, original copy, right? So then we use this invoice to record credit purchases. Credit purchases. Invoice issued by the entity is controlled by the number. In other words, serially numbered. Serially numbered 1, 2, 3, 4, 5 up to 1000 or 5000. Right? Yes. Serially numbered. So then our sales journal carries invoice reference in serial order. Serial order. Right? This is a controlling measure. So you cannot record sales skipping one invoice number. So that means after 4 you have to record 5, not 6. Right? So that is the controlling measure. Controlling measure. But for purchases, that cannot be done, because what we receive from various creditors, the invoice numbers are different. They have different way of numbering invoices. So therefore we cannot control their numbers. Right? Their numbers. They are different numbers. Another journal. This is purchases, returns and allowances journal. We place an order for calculators, and the creditor or the supplier has sent us calculators, but finally we found that some of the calculators are faulty. So then we are returning these calculators back to the creditor. So then the creditor will issue a document called credit note. This is the credit note issued by the creditor. Once the creditor receives these goods, issues a document, that is the credit note. This credit note is used to record this journal, purchases, returns and allowances journal. And there are instances where returning physically is impossible and not economical. Right? Say, for instance, a creditor sells or supplies some goods to us, and our business is somewhere, say, far away from Mosby, say 100 miles away from Port Moresby, in a village, and we ordered noodles, but what we have received are, say, expired ones. Expired ones. So then, legally, you can't sell. Illegally, you can sell. Right? And also I said, this is 100 kilometers away from Port Moresby, far away, and it's a village. But you inform the supplier and indicate that you have sent us the expired noodles, and he doesn't want to return. He says, yeah, I will reduce the price and sell them, and you have to deduct some amount from my invoice. Okay. The supplier agrees. Okay, 50% discount, right? But normally that person sells at the same price. The village people don't look at the expiry date, right? Yes. So that is called allowance, right? That is what I want to explain, allowance, right? Say, next journal is sales, returns and allowances journal, the other side of the story, right? We sold goods, faulty ones, expired ones, or the goods sold does not match with the purchase order, right? So therefore, we will have to return or ask for an allowance. Yes? Then we issue, the entity issues a document, again it is called credit note. But here the credit note is issued by the entity. The previous one is issued by the creditor. Finally, the general journal. Seventh journal, general journal. General journal is to record all other transactions that cannot be recorded in first 6 journals. 1 to 6 are specialized journals and maintained for one specific purpose, particular purpose. So then we cannot record any other transactions. But there are quite a large number of other transactions. So they are recorded in general journal. The source document varies. One is the internal memo, sometimes debit notes, right? It depends. So let me explain. First, the journals for cash transactions. For cash transactions, as you have observed, there are 2 journals. One is cash payments journal and the other one is cash receipts journal. Cash receipts journal record cash received by the entity. Source document is receipt or cash receipt slip. There are 2 formats. One is simple format, consists of discount column, debtors column and bank column, 3 columns, and basically this cash receipts journal is used in small businesses, and the other format is the multi-column format, and in this format there are a number of columns, not only 3, more than 3, to record various frequently occurring transactions. This particular format is used in large business organizations. So that is the general idea. We look at the formats and recording of transactions later. Cash payments journal, as you know, records all cash receipts, payments, cash payments. Source document is check but. In simple format, consists of discount received, creditors, sundry and bank column. More columns can be added when business is becoming large. In large businesses, cash payments journal consists of number of columns to record frequently occurring transactions. Journals for credit transactions is the next item. Sales journal, sales returns journal, purchases journal and purchases returns journal. Then what are the characteristics of general journal? General journal is used to record all the transactions that cannot be recorded in other journals. So this is the dumping yard, right? It is similar to Baruni dumping yard. You put everything there, right? It records quite a large number of transactions, right? So every day when you are advancing, you will learn at least few new items to be included in the journal, general journal. But to understand the transactions, the common transactions that are included in the general journal, let me list down few. Purchase of non-current assets. Remember, purchase of non-current assets on credit. On credit. What does it mean? Can you remember David Kavas? Now he's a friend of us, right? Yes. Or in other words, our boss. We are working for him. And we prepared transaction analysis chart for him, right? We did it for him. In one of the transactions, Paradise Limited, what was the transaction? Purchase a cash register on credit. Cash register on credit. A cash register is classified as non-current asset. Why non-current asset? The non-current assets are the assets you purchase for the use of the business for a period, for future period. Right? Cash register to be used in next 5 years or 100 years. Right? Yes. And motor vehicle is purchased to be used in next few years. So these type of assets are called non-current assets. Non-current assets are purchased for the use of the business. Other stocks are purchased for what purpose? For resale. For resale. If you purchase goods for resale, we have one journal. What is the name of the journal? Purchases journal. When you purchase cash register, motor vehicle, furniture, equipment, these items cannot be recorded in purchases journal. So therefore, we will have to use the general journal. That is the conclusion. Sale of non-current assets on credit. We have excess furniture, we have old motor vehicle, and there are computers we want to replace with new ones, right? So then all computers, all furniture and vehicles we will have to dispose. When you are selling these items, yes, either you can make a credit sale or cash sale. If it is credit sale, then you cannot record it in the sales journal, although it is on credit. Because sales journal records the goods that were purchased for resale in the normal course of business. But selling computers, old computers is not your business. Your main business is selling goods. So therefore, this cannot be recorded in the sales journal, So therefore we have to use general journal. So that is the difference. Commencement of business, introducing non-cash assets and liabilities. Owner brings non-cash assets. In the past, the examples we worked included cash. The owner introduced 10,000 as capital. Owner introduced 20,000 cash as capital. But non-cash assets like furniture, he has furniture at home, he brings them into the business until the business expands. He has a vehicle, he brings the vehicle into the business as part of his capital. So then these are non-cash assets introduced by the owner as part of capital. And there are instances where the owner brings liabilities also to the business. Say for instance, a person had a business some other location. He closed down that business and set up a new business in another location. So he has some assets and also some liabilities. Say creditors, bank loans, so you bring everything into the new business. Right? New business. So then it is part of the capital. So then you are the accountant of this organization, so you have to record these in the business books. Cash receipts journal cannot be used for this. This is non-cash assets. Right? Furniture, vehicle, bank loans, no. Then the relevant journal is the general journal. General journal. Record these these assets and liabilities in the general journal. Already explained non-cash assets introduced by the owner. Earlier I said assets and liabilities, so same thing without liabilities. Drawing of non-cash assets. Okay. That's also possible. Cash drawings we learn. Double entries are cash at bank, credit, and drawings debit. Before it goes to the cash at bank account, it is recorded in the cash payments journal, since there is a journal for that purpose, for all cash payments. So now it is recorded in the cash journal. Cash journal. Then posted to the cash at bank account. So there is no problem of entering cash drawings in the books. There is a journal, cash payments journal. Non-cash assets means goods, grocery goods. I explained to you in one of my previous lectures, grocery goods. And computers. So the computer that is being used in the business is a little bit old. So then business owner wants to replace this computer with a new one. So he purchases a new one for the business and takes the old computer to give it to, say, son or a daughter. Right? For him to play at home, or for her to play at home. Right? So he takes the computer out from the business. Meaning, as accounting person, accountant, you have to remove this from the business records. There must be a record. Then use the general journal. Writing of bad debts. Bad debts means debts turn into bad debts, meaning account receivable, we sell goods on one condition. Condition is settle the invoice within the credit period. Credit period is normally 30 days. Okay, he takes goods and he settled this particular customer, he settled his invoices in the past on time, but suddenly he doesn't pay. Right? Then you send reminders, telephone calls, and you visit the customer. Then he says, yes, I'm going to pay tomorrow. I'm going to pay next week. But sometimes the amount is 3,000, he pays only 100 kina. When you send several reminders or visit him. So then again you visit or remind him to pay, then he pays only 50 kina, and then after some time, no contacts, no responses. Say finally the amount collectible is, say, 1,500, the final amount. Then what shall we do? How can we recover this amount? Go to courts? Yes, you can go to courts and you have to pay 50,000 kina for the lawyer to recover 1,500. So it is not economical. If it is economical, 1 million kina debt or 500,000 kina debt, yes, we can constitute legal action. But here it is not economical. Then what we do? We write off from the books. That is called bad debts. Okay, bad debts is recorded in the general journal. Interest charged to debtors. If debtors don't pay their debts on time, so then we charge interest. Use general journal to record this. Interest charged by creditors, same thing. We purchase goods on credit and agree to pay the invoice value within credit period. We don't pay. We delay it. So then they also charge interest on us. Right? So these are some of the examples that you can understand at this level. Right? Otherwise, there are thousands of entries that are entered in the general journal. Right? At this stage, this list is sufficient for us to understand the general journal. Then I said there will be different documents, various documents, source documents used in general to record entries in the general journals. So these are some of them related to what I have explained. Purchase of non-current assets on credit, supplier's invoice. Sale of non-current assets on credit. In some organizations it is sales invoice, others it is debit note. The more appropriate one is the debit note. Invoices are normally issued for normal sales, but if it is non-current assets on credit, then we issue a debit note. Drawing of non-cash assets by the owner, internal memo. Memo is issued. So memo is the document that you use as an accountant to record this, because the owner acknowledges the receipt of this particular item and value is given. Again, introduction of non-cash assets and liabilities as part of capital internal memo. Value of various assets are listed here, and the liabilities, the value and the title or nature of the liability is recorded there. So then this is the authorized document for accounting purposes. Bad debts, yes. Solicitor's letter. In some cases, the debtor solicitor informs us, stating that so and so, my client has been declared as bankrupt by the courts, right? And he is unable to pay your debts. No choice. So then this is the source document, and normally it is attached to an internal memo, and then we write it off. Otherwise, bookkeepers, accounts clerks are not allowed to write off debts. Interest charged to debtors, again a debit note. Interest charged by creditors, credit note. Now let's look at the features of the general journal. General journal again records transactions in chronological order, date order, and this journal, the format is different from other formats. Amount debited and the amount credited are shown clearly in the journal itself. In other journals, this is not the case. In addition to that, a brief narration for every entry is made. Brief narration, one sentence, together with the source reference, source document reference. And there are some norms or conventions. Debit entry is written before credit entry. First you write the debit entry, then the credit entry. If you write credit entry first and then debit entry, so that is not acceptable, and those who read that entry come to know that he is amateur or trainee or a student who has gone wrong, right? Wrong way, not properly learn accounting. Then rule of and separate entries. Make the first entry and separate it by a horizontal rule or line, and then start the second journal entry, and then horizontal line, then the third entry. That's the way it is done. And leave little space from left hand side when writing the credit entry. So then I cannot explain this without a journal. So next time when I explain to you with the transactions, so then I can show you the meaning of this statement. Then in the general journal, a journal entry contains the following: date, account to be debited and credited, narration, and folio reference. Folio means page number of the ledger. Page number of the ledger. Sometimes this is referred to as post reference. Post reference and folio, same thing. With the introduction of computerized accounting, now we do not use this term folio, instead we use the posting reference. But for manual accounting, still we use the folio reference. Having completed the theory part of posting journals, now let's look at the practical part of posting journals. Turn to illustration 10.1, where you can see a cash receipts journal like this, and also the ledger account balances as additional information, and also the extract of chart of accounts. Now, based on all this information, now we will work out ledger accounts. So this is the cash receipts journal. Now we are going to learn how to post cash receipts journal to the general ledger. So journal is like this, and there are columns. All the receipts have been classified, and totals are given on this date, 4th March, and now we have to post these items to the individual ledger accounts. Firstly, the posting principles. Some of the items, as you know, are posted individually, and some of the items are posted as totals. So observe these principles when I am posting this cash receipts journal to the ledger accounts. 1st March, cash sales. Cash sales is normally posted as a total, so therefore leave it. And next one, trade data ILA, is posted individually, therefore the post reference is the account number 102.3, that is the account number of ILA's account number, and now post this amount. The first thing is to enter opening balances before you make any transfers from cash receipts journal. In ILA's account, the opening balance is 1,500 debit balance as per the question. So then SCIBI, there is a balance on this date. Balance is 1,900 debit, and then cash at bank account, yes, there is a balance. The balance is 5,000 kina debit balance. So enter that amount in the balance column, and there are no any other balances in other accounts. So now we can start posting. Here the sales, cash sales is posted as a total, so therefore leave it. And second, trade data ILA, enter the account number in the post reference column, and then transfer this amount to ILA's account. ILA's account on 2nd March. 2nd March, it is from cash receipts journal, but we record here cash at bank, and journal reference is here. This is the cash receipts journal, page number 10. Enter that reference. Cash receipts journal, page number 1. The amount received from ILA is 980. 1,500 debit balance, opening balance, minus 980 is 520 debit. And then you can see discount allowed 20, that 20 also credited to the ILAS account. See, this is the cash receipts journal, CRJ. It is on the same day. Discount allowed, CRJ1 20, and the final balance is 500K. Then next item in the cash receipts journal is interest revenue. Interest revenue is recorded here in sundries column. So sundries column items are posted individually. So therefore find the interest revenue account. Interest revenue account here, put the date, and then in particulars column you write cash at bank, journal reference CRJ, CRJ1, interest revenue, credit 200, and extend that amount to the balance column CR, and then go back to the cash receipts journal. The next item is on the 4th, amount received from debtor, and here you have to record the account number, that is 404. Skibi, account number 102.8, and post that amount on 4th March, date 4, cash at bank, journal reference CRJ, page number 1. Amount received from Skibi in cash is 270, and then find the balance. It works out to 1,630 debit balance, followed by the discount allowed, that is 30 kina, cash at bank CRJ1 30 kina, and this the final balance is now 1,600 debit balance. Now we have posted all individual amounts, and now look at the totals. Discount allowed column is again posted to the discount allowed account as a total. Then find the discount account number. Account number is 504. 504 is written here. When you are posting totals, then the account number is written below the total. It's here. Once this account number is entered, it is an indication that the posting has been made. 504, and here discount allowed column, discount allowed account. And when you are posting the totals, you have to put the date here, that is March 4th, that is the balancing day. In discount allowed column, you write sundry trade debtors. This is not only one account, this is from, say, 2 accounts. 30 here, 20 here, and if there are some more items, so this is the total. Therefore, we just write sundry trade debtors, and the journal reference is again CRJ 1. Discount allowed column, debit 50, that is the total, and extend that amount to the balance column, debit balance of 50 kina. All right, what else? Now this amount has taken. All the amounts in this column already posted individually. Cash sales not posted, so this is the time for us to post this. Then find the account number. Sales account is 401 account number. It is given. $401 posted to the sales account, that is again on the balancing day. Balancing day is the last day of the journal, that is 4th March. 4th March, take the total. Then cash at bank, journal reference CRJ1, sales credit 1000 here, credit. Now GST column, again GST column is posted as a total. Then find the account number. Account number is 206. Then find the GST account. GST account is here. Cash at bank, CRJ1, GST control account, credit 100 kina, credit. Then sundries column is posted individually. The individual amounts in this column are posted individually, so we have already posted. And the last column is the bank column. So bank column total is posted to the cash at bank account. Cash at bank account number, account number is 101 here, and find the cash at bank account is here and date is 4th, because this is the last day of the journal, or posting date is 4th. Then we write here cash receipts. Cash receipts, that is the total cash receipts for the period, and coming from cash receipts journal, page number 1. Cash receipts total debit 2,550, and the total is now 7,550 debit. Now look at the cash receipts journal. Now we have posted all the entries using the principles that we have learned earlier. So this is the way of posting cash receipts journal to the general ledger, whether it is 4 transactions or 100 transactions, same principles are applied. So look at carefully and the way it is done. This post reference is very practical, and once you enter the account number here, this means you have completed the posting. Otherwise, if you leave it blank, that means this journal, cash receipts journal, has not been posted. And again, it is important for you to note, when you are posting totals, the account number is written here below the total column, below the total. So that's all. So this indicates that all the amounts have been posted to the general ledger. All right, now next we'll move on to the next step, that is posting cash payments journal to the general ledger. Turn to illustration 10.2 and you will find this journal cash receipts journal, and also there are additional information like additional information includes balance of various accounts. Okay, and here the cash payments journal, page number is 42. This will be used when posting items to the ledger. All right, so here there are a number of items included here, and these are the ledger accounts: trade creditor Gabi, Renagi, purchases account, wages account, security charges account, stationery expense account, discount account, GST control account, cash at bank account. So all these accounts are drawn on the basis of the cash payments journal here. All right, so then individual amounts are posted. First, creditor Gabi, individually posted. Then find the account number, Gabi's account 201.5, and before that, yes, if there are any balances, yes, we have to include balance, credit balance of 700 kina, Renagi, a balance of 600 kina, credit, and cash at bank account shows this is the first thing you should do, balance, and for balance there is no journal reference, remember. Cash at bank account shows 6,000 balance, opening balance, and now then post the items or transactions to the respective accounts. Gabi, account number 201.5, so it's here, and the date is first, so therefore not necessary to put the dates again. Gabi, cash at bank, CPJ, page number 42, amount received is 680 kina, and we had a 700 balance, and now 700 minus 680, it is 20 credit balance, 680 posted, now 20 kina discount received to be debited to the same account. This is discount received account. Again, the reference is CPJ 42 and 20 here. And now there is no balance, because 700 payable and we paid 680 and received paid 680 subject to 20 kina discount, therefore no balance. Okay, that is over. Security charges is shown in the sundries column, so therefore these amounts included in the sundries column are posted individually. Therefore, find the security charges account number. It is 508. Find the account here. Security charges. Date 2nd January. Cash at bank. Journal reference CPJ 42, amount 200, balance 200, debit. It's over. And next item is cash purchases. Yes, cash purchases are recorded in the cash purchases column, so it is posted as a total, so therefore leave it. Stationery expense recorded in the sundries column, therefore post it as an individual item. Okay, stationery expense, what is the account number? 510, record 510 here. And then move on to the stationery expense account. Stationery expense here, date 5th January. Cash at bank, CRJ 42, 120, balance 120, debit balance. Next, wages recorded in the sundries column, therefore posted individually. Wages expense, find the account number, it is 507. 507 is here, date 4th January. Cash at bank, CPJ 42, amount 100 kina and balance debit 100 kina. Then trade creditor Renagi, this has to be posted individually. Find the Renegade's account. It is 201.8. Then date 5th January. Cash at bank. CPJ 42. Amount paid is 300. Now the balance is 300. Credit. Discount received. CPJ 42, 10 kina. Now the balance is reduced to 290 kina. Okay. Then posting totals. Discount received. Account number 611. Account number is here. Last day of the journal, that is the posting date. So then it is sundry trade creditors, CPJ 42, discount received, credit 30 balance column, credit. Next, trade creditors column already posted. Cash purchases, yes. Find the account number 501. 501 purchases here, date 5th January. Cash at bank, CPJ 42. Purchases 600 total. 600 debit. This is CPJ, not CRJ. Let me correct it. Okay, then GST account 210. GST account 210 here, date 5th January. Cash at bank, CPJ 42, debit 92, debit 92. And next column, sundries column, these items were already posted, and the bank column. Bank column is posted to the cash at bank account. Cash at bank account, account number 101. $101, 2092. Find the account, it's here. The date is 5th January. And what we write here, cash payments, when you record or post the total cash payments, it is cash payments. CPJ 42 and the amount is 2092. Now the balance is 3908 debit balance. Debit balance. Now look at the cash payments journal again. This cash payments journal, all the items have been posted now. Right. That is about cash payments journal. And then we will move on to the post in sales journal, to the general ledger. Turn to illustration 10.3. 10.3. The journal is shown like this, and additional information shows the chart of accounts. So now next step is to open up the ledger account. So I have done it already. Now we will learn how to post these items to the general ledger. And no opening balances given, so therefore we can post this item straight away. Thomas is a debtor. Not only Thomas, all these names appearing in this column are debtors. So therefore we will have to post these items individually. Okay, let's start. And Thomas's account 102, that's the account number, 0.4. Thomas, its account number 102.4. Yes, this is on 1st January. Put the date, January 1st. January 1st. And here we write sales, and the reference is SJ1, sales journal, page number 1. Trade debtor, debit 300 debit, and GST $400. Sorry, the amount is 400, not 300. Amount is 400. Let me correct it. 400, and GST control account SJ1, amount is 40. Now 440 debit. This means the amount receivable from Thomas is 440 inclusive of GST. So then next one, Frank, account number 102.8. 102.8. Same method. Frank's account. It is 2nd January. Sales SJ1. Sales 300. 300 here, and GST control 30 kina. Then total amount receivable from Frank is 330 kina inclusive of GST. Next, Guruka Stationery Shop, account number 102.9, 102.9, sales amount 100, date January 3rd, sales SJ1, amount is 100 debit, GST control SJ1 amount 10, then amount receivable from this debtor is 110. Okay, move on. Now, sales column total is posted to the sales account. Sales account, account number 401, 401, sales account here, the last day, last date of the journal is 3rd. Then we write here sundry trade debtors, and this reference is SJ1, sales credit 800, balance column 800 credit. Next, GST column total is posted to the GST account, that is 208. GST account 208, 3rd January. January again sundry trade debtors SJ1, GST control 80 credit. So now we have posted all the items. Total is normally not posted to any account because 880 is there in the sales account as 880 separately. Now we have posted sales journal to the general ledger. What is next? Next is to understand posting sales returns and allowances journal to the general ledger. Turn to illustration 10.4 where you can see this journal, sales returns and allowances journal. Additional information given account balances and the chart of accounts. And the debtors, those who have returned goods, are the same debtors, Frank, Thomas and Gorka Stationery Shop. So we can use the same ledger accounts, and it is continuous posting. Okay, let's look at the sales returns and allowances journal. Frank's account, as you know, it is 102.8, 102.8, it's here. The date is 12th. Sales returns and GST. Now we learn how to post two items at once. So here we posted sales separately and GST control separately. Instead of making two entries, we can make one entry like this. Sales returns and GST is the reference, and then it is from sales returns journal, page number 12, that is the page number given to us, and total amount GST and GST and sales returns, the total amount is 66. So 66 can be posted straight away rather than making two entries. $330 minus 66 gives us 264 debit. Similarly, next transaction on 13th, Gorka Stationery Shop. Gorka Stationery Shop, account number 1.2.9. Then the total amount is 55. So 55 can be posted straight away. Find the Gorka Stationery Shop, and date is 13th. Sales returns and GST. Sales returns journal, page number 12. Amount is 55, then balance 55 debit. Next, Thomas, account number 102.4, total amount 44, date 15th January, sales returns and GST together. Sales returns journal, page number 12. The amount is 44. Then 840 minus 44 is 396 debit balance. Now see, all the individual amounts have been posted, and now the totals. Sales returns account, account number 402, here. Sales returns and allowances journal, and the posting day is 15 January. And what we write here, sundry trade debtors, SRJ 12, SRJ 12, 150 debit. Then GST, this total amount posted to the GST control account, 208 here, January 15th, that is from sundry trade debtors, sales returns journal, page number 12, amount is 15, 80 minus 15 is 65, credit balance. Credit balance. Now check the items. Yes, we posted all the items. Next is posting purchases journal. Posting purchases journal to the general ledger. Turn to illustration 10.5. Illustration 10.5, where you can find this journal. And now this is the time for us to post this journal. The individual amounts, creditors, these are creditors, amounts are posted individually. Sharp trading here, the date 1st January, put the date. Sharp trading, then again we can combine GST column and the purchases column. That means 5,000 plus 5,000 and 500, altogether 5,500. We can post the total amount here rather than posting two items. Then it is purchases and GST. Purchases and GST control. Purchases journal, page number 1. Total amount 5,500, credit 5,500, balance is credit. Sharp trading 201.4, Phillips trading 201.5, amount 2,750, 2,750, date 2nd, purchases and GST. It is purchases journal, page number 1, 2,750, 2,750 credit. Next, Sony trading 201.6, 201.6 and date Sony trading, what date is it? Sony trading 3rd, January 3rd, it's here. Purchases and GST, PJ1, the amount is 1,650, 1,650 here. Credit. Next, National Trading, account number 201.8, amount 1,320, date date 4th, purchases and GST control, PJ1 1,320, 1,320 balance column, credit. Purchases column, total is posted to the purchases account. Purchases account number is 501. Posting date is 4th. Posting date is 4th. Then what we are going to write here, sundry trade creditors, PJ1, total purchases total is 10,200, it is a debit balance. GST control account, account number 208. GST control account here, date 4th January, sundry trade creditors, PJ1 1020, it is a debit balance. Now individual amounts posted separately and totals posted to the respective accounts. That means purchases journal has already been posted to the general ledger. Next, posting. Next, posting purchases, returns and allowances journal to the general ledger. So here the same creditors. So then we can use the same ledger accounts to record the transactions with these creditors. So here it is credit note number, credit note number is given. Okay, sharp trading. Account number 201.4, amount 550, date 20th January, then purchases returns and GST. PRJ, page number 12, as shown in the purchases returns journal. Debit the amount, then balance will be 4,950, still a credit balance. Then next item here is the Phillips Trading, account number 201.5, amount 275, date 21st January, purchases returns and GST, purchases returns journal, page number 12. Now let's try to understand posting purchases returns and allowances journal to the general ledger. Turn to illustration 10.6 where you can find this journal, purchases, returns and allowances journal. And also if you look at carefully this column, particulars column, where you can find Sharp Trading, Phillips Trading, Sony Trading and National Trading. So these are the creditors who have returned that we return goods to these companies, and therefore we have these accounts here. Therefore we can use the same ledger accounts to post purchases returns as well. So then Sharp Trading account number is 201.4 and the amount is 550. 550 consists of purchases returns and GST. So we can post the total amount to the Sharp Trading account. Here the Sharp Trading account, date 20th, purchases returns and GST, purchases returns journal, page number 12, and amount is 550. Once it is debited, the final balance is 4,950. Similarly, we can move on to the next transaction, that is on 21st, Phillips Trading, account number 201.5, amount is 275. Then this is Phillips Trading, date 21st, purchases, returns and GST. P, purchases, returns, journal, page number 12. Page number 12, 275. Then the balance is 2,475 credit. Next is Sony Trading, account number 201.6. Sony Trading. Sony Trading is here, and date 22nd, purchases, returns and GST. This is from purchases, returns, journal, page number 12. Amount here, amount is 330. Debit and 1,650 minus 330 is 1,320 credit. And again the last item, National Trading, the account number 201.8, amount is 132. National Trading, here the date is 23rd, purchases, returns and GST. Purchases, returns and GST, PRJ, page number 12, amount 132. 1,320 minus 132 is 1,188 credit balance. Now we posted all individual amounts. Now next step is to post the totals. Purchases returns account, account number 502, total 1170. Here it's here. Date, posting date is 23rd. Sundry, trade creditors, PRJ, purchases returns journal, page number 12. Purchases returns and allowances journal. Purchases returns and allowances account. This is not journal. 1170. Balance column also 1170. Credit. GST column total. GST account number 208, 117. Same GST column. GST account here. 23rd. Sundry, trade creditors, purchases returns journal, page number 20, and the amount is $117. Therefore, the balance is 903, still a debit balance. Okay, now yes, we have completed individual amounts as well as the totals. The last item, posting the general journal to the general ledger. Posting the general journal to the general ledger, and turn to illustration 10.7, where you can find this journal, general journal, only one item, where it says the business has purchased office equipment on credit from Strong Pillar Office Suppliers. Equipment cost 2,000 and GST paid, GST payable 200, then altogether the invoice value is 2,200. Then how to post it? The account numbers are given here, and it is, say this posting is done on 31st January, this is the assumption. Okay. Here sundry creditor, Strong Pillar Office Suppliers. Here the journal reference is, we put general journal, page number 1. So here it is GJ1, General Journal, page number 1. The value or the cost of the equipment is 2000, therefore 2000 debit, and GST control debit 200, December, January. We assume that posting date is 31st. Then same here, GJ, page number 1, 200 here, debit, and Strongfella office supplies, date 31st. Particulars of his equipment, and GST, again from General Journal, page number 1. Amount is 2200. This is the amount payable to Strongfella office suppliers. It consists of the cost of the equipment plus the GST. So GST is recorded separately, equipment cost is recorded separately, 2200 is the amount payable to the creditor. So that's all. Now you have learned a lot of things. If you want me to summarize it, here we have learned how to post cash receipts journal to the general ledger, and then we have learned how to post cash payments journal to the general ledger, and then you have learned posting sales journal to the general ledger, and also posting sales returns and allowances journal to the general ledger, then posting purchases journal to the general ledger, posting purchases returns and allowances journal to the general ledger, and finally posting the general journal to the general ledger. So all these transactions were recorded in the ledger accounts separately. But in real situations, in real business situations, this is not the case. All these transactions are posted simultaneously. So next step is to learn how to post all the journals to the ledger simultaneously.